Why is BlackRock buying so much Bitcoin right now? According to Michael Saylor. Also, the latest from the Giga Chat, his latest predictions and what's going on with Microstrategy and Michael Saylor. So let's break this down. First and foremost, as you can see here, Saylor's now up $1.27 billion in profit on Microstrategy's Bitcoin stack. Well done. Gotta love those laser eyes, right? Now, let's dive into the story here. Michael Saylor expects Bitcoin demand to double after the halving and spot Bitcoin ETF approvals. Send it and let's go. Here we go. Microstrategy Chairman Mr. Saylor discussed the future outlook for Bitcoin in a new interview with Fox Business on Monday. The pro-Bitcoin executive was asked about the factors that will drive up the Bitcoin price action. Let me zoom this out a bit so you can see more on the screen. Let me know if that helps. Saylor explained that the supply and demand for Bitcoin are in balance as of right now. However, he emphasized there are two events that will boost the price of the crypto. We have the halving in April of next year, roughly 5 months out, when the Bitcoin supply gets chopped in half, and the impending approvals of a spot Bitcoin ETF by the US SEC. He also stressed that following the halving and the launches of the spot Bitcoin ETFs, quoting him here, the demand has got to at least double, 2x fam. So the only thing that's going to adjust there is the price in order to get to market. Preach. Now, what if we 3x, 4x, 5x? You can break down the math. The Microstrategy Chairman advised investors to watch for the halving and the approvals of the spot Bitcoin ETFs, noting that the next 12 months will be pretty auspicious for the asset class. Now, Michael Saylor believes that the price of Bitcoin will eventually reach a staggering $5 million per coin. Quoting him here, there are three things that are massive catalysts to cause an acceleration, the executive said during a discussion on X. Those three things don't take us to 500,000 per Bitcoin. They take us to $5 million per coin. Send it. Let's go. He proceeded to explain that the first is a spot ETF where someone can go ahead and buy 100 million in Bitcoin by an ETF security. The second is your bank will custody it for you and lend against it. And he also added, noting that the third is the ability for businesses to make their own Bitcoin investments up or down in their balance sheet on fair value. So there you have it. Now, I also transcribed the recent interview he did where he's actually, this is the full version of what we were just discussing, and I think it's noteworthy to share it with you. So I'm going to read it out loud. Here's why you need to own at least 0.1 Bitcoin. The more the merrier. Here, quoting the Giga Chad. I think there are only three things relevant right now, and here are those three things. Number one, the halving is coming with 100% certainty, fam. And as far as I can see, most of the selling of Bitcoin is in the market with Bitcoin miners that have to sell in order to pay their electricity bills and pay their debt, expenses, and operating expenses. So that amount of selling pressure is going to be cut in half in just a few months. So we know that's coming. Preach. And then we know there is a spot Bitcoin ETF coming. And when that comes, we plug into Wall Street and the entire banking system. And then finally, that fair value accounting is coming. And when that happens, the objective will go away. And now you're going to introduce this as a conversation into hundreds of boardrooms. This will not move in a week. They move quarterly, but over the course of 12 quarters, you'll start to see company after company looking at this, and you'll start to see a reallocation of assets. And at the end of the day, corporations only hold two assets. Number one, they hold cash and they hold bonds. And so if Bitcoin is available as an asset pari passu to a bond, then you'll see a reallocation from bonds and into Bitcoin. That's when things get exciting, fam. Continuing. And then in the institutional investor side, you've got all of these people holding real estate, holding commodities, holding gold, holding ETF and SP indexes and the like. And if they start to reallocate, and they will, 1%, and 2% and 5%, then you're going to have something that has never happened in the history of the world, which is you've got an ETF on a commodity that is scarce. Preach. Every other ETF in the world is on an asset that is not scarce. It is inflationary. You can make more buildings, you can make more real estate, you can make more gold, you can make more commodities. You can make $4 billion worth of any of those things. The underlying producers produce more of the asset to deflate or to depreciate the price. That's how they control the markets, right? Now with Bitcoin, when $100 billion flows into the spot Bitcoin ETF, there won't be any ability for any producer to produce any more Bitcoin. That's right. We have that finite limited supply. And so you really can't compare it to the spot and ETF of gold, because gold is an inflationary asset and you can't compare it to an ETF on real estate or on bonds or on equity. You really have to say, this is the first time we have ever plugged Wall Street into an asset you cannot produce any more of. Facts. Now, and so nobody knows what will happen except that if you reason from first principles, you know it's got to actually perform better than all the other asset ETFs because the underlying fundamentals are just better. But let me lay out 3 possible ways to invest into Bitcoin. Number one, if you buy Bitcoin, the underlying asset. The second is if you buy the spot ETF. And the third is you buy Microstrategy. Okay, we talked about the headaches of buying Bitcoin, the underlying asset. You have to do it on a crypto exchange and put in place parallel custody, compliance, compensation, control system. That's the challenge of that. The closest thing, the most compelling idea for a plain vanilla Bitcoin investment of an institutional investor is you buy the spot ETF. You're getting a 1-to-1 correlation. For $1 million you put in, you're getting $1 million worth of Bitcoin. What's the positive? It's marginal. It's good collateral. I can buy in a second, no money down, and I don't need to build parallel custody control compensation systems. So all of my problems are handled by Wall Street. What's the cost? It's 50 to 100 basis points a year. Pay attention. Okay, so if I charge you 1% per year over the course of 20 years or over the course of your lifetime, it means that I take 20% of the money you invested at 1%. Ouch. So there's a cost. 50 basis points means I get 10% of your money, approximately. But having said it all, I would pay you 50 to 100 basis points in order to be plugged into Wall Street, and it's not a problem. It's a lot better than the alternative, which is to rebuild all of their systems and then finance themselves. So MicroStrategy is not that. MicroStrategy you can think of as a levered long Bitcoin company that pays you yield. Now, how many of you are invested in MicroStrategy? Let me know, fam. Okay, so I'm not going to call it an ETF because we're not a financial company, but we have 4.4 billion plus of Bitcoin and 2 billion plus of debt. And now that figure is probably north of 5 billion, fam. So what we have done is we have levered the balance sheet with debt that costs us about 1.5% interest. So MicroStrategy takes advantage of its position as an operating company to do something that an ETF cannot do. An ETF can't issue junk bonds. An ETF can't issue convertible bonds. An ETF can't do like an ATM, like we can do, and an ETF can't buy Bitcoin with cash flows. So we have a lot of the flexibility as an operating company, and we don't charge that fee. So we have 4.5 billion of Bitcoin, but we don't charge $45 million per year. So the real idea here is, what if I created an investment vehicle that paid you a yield instead of charging you a fee? And what if I was able to borrow money at 1.5% interest? I borrowed $1 billion at 0% interest and bought Bitcoin with it. Where do we get these deals, fam? Anyone know? Let me know, please. I'll take $1 billion with 0% interest any day of the week. Just saying. Anyways, let me give you a theoretical. If you get a 2% yield instead of paying a 1% fee, it's a 60% difference over the lifetime of your asset. So if you have $1 billion invested and you're getting a 2% yield, you're actually picking up $20 million per year instead of paying $10 million per year. So the dynamic of the company is very important. So you can imagine that if I don't charge you a fee, and if I have cheap leverage, the stock and benefit accrues to the common stock shareholders because I borrowed $2.2 billion at 1.5% interest and I bought Bitcoin with it. So what's the logical theoretical yield of Bitcoin? Is it more than 1.5% per year? Well, let's say it was 15% a year. Then we're scraping 14% positive real yield off of the debt. And so that would be 14% of $1 billion or more, actually 14% of $2.2 billion. That would be $300 million a year that accrues to the benefit of the common stock shareholders. You see, this is the benefit of being an operating company. You can, and we can every quarter, choose what to do. So some quarters we would issue junk bonds. Other quarters we issue convertible bonds. Other quarters we would sell the equity. Other quarters we would just use our own cash. So the answer is there's always going to be a good market and there's always going to be a bad market. There's things you shouldn't do and there are things you should do. So MicroStrategy, to make a long story short, is a bit more complicated than a spot ETF, right? If you want something plain vanilla and simple, that it should basically correlate 1-to-1 with Bitcoin after you pay the fee, then you buy the spot ETF. If you wanted to actually try to outperform Bitcoin like MicroStrategy's outperform Bitcoin, our performance over the course of the 3 years is higher than Bitcoin's performance. So if you want to outperform Bitcoin or outperform the spot ETF, you would do that by accretive financings. Like, for example, if our stock trades at a 30% premium to the underlying assets and we sell $1 billion worth of equity, we actually capture 300 million of accretion of our shareholders. So there you have it, coming directly from the Giga Chad himself. Let me know if you agree or disagree with his $5 million Bitcoin price prediction.